Why is everyone talking about GameStop stocks? We dive into this question on the market on this January 28th, not so news up. So the stock market was the talk of the day yesterday. Generally, this happens when there's craziness of a giant drop in the market. However, when looking at the Hill, we see overall it was a medium loss day. From the Hill, we have reports. Stock market closed with significant losses on Wednesday, even as the Federal Reserve kept interests locked at near zero amid unusual trading activity fueled by online amateur investors. The Dow Jones Industrial Average lost 635 points, or 2.1%, its largest drop in the past 3 months, while the S&P 500 erased its gains for the year, dropping 98.8, or 2.6%. The drops were undeterred by Federal Reserve Chairman Jerome Powell, who backed additional fiscal support and dismissed concerns that it would lead to a spike in inflation. However, not included in the Hill's analysis is two major stocks that were the talk of the internet, GameStop and AMC. From the Washington Post, they note the following story. GameStop stock prices more than doubled to $345 a share, or more than 130%. AMC, beleaguered by the coronavirus pandemic and stay-at-home measures, quadrupled to $19. This frenzy played out amid a decline in the broader market. The Dow Jones Industrial Average fell nearly 634 points, or 2.1%, as investors sorted through a mixed bag of corporate earnings. The broader S&P 500 dropped nearly 99 points, or 2.6%, while the tech-heavy Nasdaq shed about 355 points, or 2.6%. The GameStop and AMC price surges were so dramatic that trading for both companies was temporarily halted by the stock market and exchanges to temper volatility. But once trading resumed, prices took off again. TD Ameritrade, a leading trading platform, took the unusual step of attaching restrictions on both stocks, citing an abundance of caution amid unprecedented market conditions. So, what happened with these two stocks? Essentially, the r/wallstreetbets, which is a subreddit that's dedicated towards stock market investing, saw that there were an excessive amount of shorts currently in line for these two stocks, which means that they could easily make money by expecting the stocks to increase, which they could do by using the r/wallstreetbets forum. So, just for a quick definition of what short selling is. Short selling is an investment or trading strategy that speculates on the decline in a stock or other securities price. It's an advanced strategy that should only be taken by experienced traders and investors. Traders may use short selling as speculation, and investors or portfolio managers may use it as a hedge against the downside risk of long position in the same security or a related one. Speculation carries the possibility of substantial risk and is an advanced trading method. Hedging is a more common transaction involving placing an offsetting position to reduce risk exposure. In short selling, a position is opened by borrowing shares of a stock or an asset that the investor believes will decrease in value by a set future date, the expiration date. The investor then sells these borrowed shares to buyers willing to pay the market price. Before the borrowed share must be returned, the trader is betting that the price will continue to decline and they can purchase them at a lower cost. The risk of loss on short sale is theoretically unlimited since the price of any asset can climb to infinity. Essentially, a short definition of short selling is that it's the opposite of how we generally see stock investment. Normally, when you invest in a stock, you expect it to increase in price. Short selling is expecting at a set sometime in the future that a stock is going to be less than the current market. And this is how wallstreetbets was able to come together and essentially steal from these wealthy hedge funds that were betting on the losses of these two stocks by forcing the market to go up. And a lot of it you saw was just people that only invested a couple $100 as their way to get back at the man. I think alone this would have been a noteworthy story. However, the story continues by the media and political responses actions. First, we have the Daily Wire, who reports on Jen Psaki and her comments on the noteworthiness of the market day. During one of her press conferences, we hear Is the White House concerned about the stock market activity we're seeing around GameStop and now some other stocks as well? One reporter asked Psaki, has there been any conversations with the SEC about how to proceed? Well, I'm also happy to repeat that we have the first female Treasury Secretary and a team that's surrounding her and often questions the market, Psaki replied. She continued by noting the White House would send reporters to the Treasury for comment, but our team is of course our economic team, including Secretary Yellen and others, are monitoring the situation. When asked about the steep stock Dow decline, Psaki responded with a confusing excuse. It's a good reminder that the stock market is not the only measure of the health of our economy, she said. It does not reflect how working and middle-class families are doing. It's really funny. You hear, concerns for hedge funds, and their response is, a very, identity politics based response. It seems like there's really a disconnect, and on top of the regulations we're starting to see, we see that the government is protecting these hedge funds. I have a hard time believing anyone that's calling for market regulations is doing so on the interests of their constituents, and really is only doing it based on these hedge funds and large account owners. Additionally, we see from CNN Chris Cillizza, who says that this market change from Reddit was rooted in Trumpism. He reports the following. What made Trump's argument so potent, politically speaking, is that he wasn't just calling out elites. He was saying that average Joes needed to rise up and actually show them how wrong they were. That voting him for him was the best way to express their anger and frustration with the condensation of their alleged betters. Donald Trump offered himself up as a collective middle finger to the elite, and he won. And which brings me to the current, seemingly inexplicable stock surge of GameStop, the video game seller that has made its money over the years thanks to its locations in malls. The origin of the surge are in prevalent belief among Wall Street sharps, professional investors that GameStop stock, even before this recent spike, was overvalued. After all, shopping malls are in a long decline. Malls are doomed. 25% will be gone in 5 years, read a CNN headline in 2017. That has only been exacerbated by the COVID-19 pandemic. As a result of the belief among pro-investor crowd that GameStop was essentially doomed, they began shorting the stock, essentially betting on its failure. This happens all the time to a variety of stocks with very little fanfare. It is the way of the modern stock market. Except that this time amateur investors decided to revolt against the pros. Using Reddit and a subreddit known as r/wallstreetbets, the amateurs began coordinated effort to buy GameStop stock to drive its price higher and higher. It's worth noting that Reddit was also a gathering spot for some of the most ardent Trump supporters in 2016. That line is getting a lot of attack from CNN. Reddit is a very prevalent, generally leans left on, all issues. And this bad faith argument that is assuming this Wall Street Bets is a Trump rating grounds is absolutely unsupportable. And, giving fire to, or fanning the flame to the fire. I've seen comments in the subreddit that, a majority of these voters voted for Biden. And it's very interesting that CNN is defending hedge fund owners. I've often been critical of the left and its protection of the oligarchs and the elites, and this just seems to, enforce that idea. I think even funnier is coming some tweets that were made from Market Watch. One of their writers, Jeremy Odens, had the following statement on. I get that people think it's funny when bad things happen to Wall Street types, but this GameStop thing is not a joke. These are stock traders conspiring to manipulate the markets in open view of us and all using that, it's for the lulz and the other side sucks as an excuse. This is the equivalent of cheering on hackers when they are defacing websites and companies or governments you don't like. But when those same hackers attack your website or government, you won't think it's funny. Okay guys, since you're on here on my timeline now, let me tell you what the asshole conspirators on Wall Street Bets won't. Sell that S and get your money. Don't hold, recognize your gains before the steps in, or before the SEC steps in. Enjoy ratioing me. I hope you're smart enough to get out fast. This just shows, once again, the elites that are all conspiring together. You have the SEC, you have things like Market Watch, and you have CNN all working together, showing this conspiracy that we see that encourages shortening. shortening bets on the loss of a stock, and one of the easiest ways to do that is for a stock to get bad press. From the official Market Watch Twitter, we see, you may think it's funny to value GameStop like it's 2007 again and hurt some hedge funds in the process, but you might not think the next target is funny, nor the next, nor the next. We just see like everyone working together, and at this point I find it funny. I don't really care about a hedge fund. You probably don't care about a hedge fund. Our 401ks are at most going to have a minimal loss from something like this. And ultimately, this is what you get when you bet on a company to fail. You have no way of stopping something like this from happening. And from what I understand, r/Wall Street Bets use nothing but common public knowledge. I want to finish off with something that, gets to almost the root of this issue between the government and its regulation of the stock markets. From investor.gov, we have on the following site that says, that goes into some like investment fraud and protecting people. They have the following tweet at the bottom of their report. If your friend, family member, or coworker encouraged you to invest in opportunity guaranteed to pay at least 10% returns, what would you do? And it's making the assumption that a 10% gain in stocks is unheard of and it's obvious fraud. Now, you have to remember that a lot of government agencies invest your pension funds in stocks, and when they make the assumptions for how much they're going to get in returns, they're expecting in the ballpark of 5 to 8% growth. Makes you think, are they part of this game too? That's your Not So News update. Have a good one.